Welcome to the Trading Lounge, and here we're looking at a weekly chart, and it's the Barclays bond fund basically. And so when bonds are moving up through here, then stocks are going to get weak. And what we're looking at here is we've been looking at a five-wave structure to the upside, and now we're looking at a corrective pattern through here, so we expect bonds to move higher, and of course that's going to put pressure on stocks. So this high here should be taken out in terms of the bonds. This is Barclays 20-year bond fund, so it gives a good bearing on stocks. So stocks are going to get a hard time over this. So just and with the stock market here, the S&P 500, we've seen this structure move up through here, which is not very. Yes, it is an impulse wave, a five-wave structure, but it's got overlapping wave structures within that, and what I mean by that is this high here is taken out by this low, this one by that one, and this one by that one, and so forth. So it's sort of corrective, but being impulsive to the upside, a bit tricky to get your head around, but you can just simply see that it's creeping to the upside, so it needs a reasonable sort of shakeout. So that's looking at that weekly bond chart is just putting that sort of pressure there. The bonds and the US dollar will move together, of course. So look, what we're sort of considering here is that on the S&P 500 and the Dow Jones, this sharp move down here appears to be impulsive. So we would be looking for a 61.8 counter trend here for a B wave and then down for a C. I do understand that these are also reoccurring patterns through here as well. What I mean by that is that the sharp moves down have been followed by a sort of sluggish move to the upside. So that's possible as well, but we couldn't really call a bullish market in unless the 1565 here, where the new supply will be, the resistance rather. If that was at support, then we could call it to the upside there. Day traders could work the 1560 here as well as a nice support to the upside to the 1565 if that was the case. But we are looking at this here as a corrective move, and once that's complete, then we'll see a wave C to the downside, which doesn't make it any easier because the 1550 here is also a nice support as well. On the short side, if you're looking for a short, then the 1555 as a retested resistance would be a trigger for that. The length of the C wave here will first of all be in 5 waves, but it's also be about the same length as this one here, because a corrective pattern, an A and a B and a C, has a wave equality normally between the A wave and the C wave. The C wave is normally a bit lazier, where the A wave is sharper. So look, unless we get support on the 1560 here, and more so on the cash market, then expect another 5 waves down through here. If we can just have a look at that in. This is sort of it here really, so just sort of 15-minute chart. So this move down through here, we'll be looking at the 61.8 retracement level, which comes in at the beginning of subgroup 2, the 65, 72 and the 80 there. So so we're looking at this being an A wave to here, a B wave to here, and a C wave into this sort of area through to here. It could fail at the 1560 as well, but support on the 1560 would see a retested support, not just trading above it, and it has to come back and test it, and all these tests have failed so far. So if it found support on the 1560, then you need to be long. You need to be on the right side of the closest largest number after retesting, and if you can read the volume, then that's going to confirm the price action as well. Now look, the other sort of headline news, we've had a few headline news events from Japan. That's done and dusted. So the ECB was last night. Draghi was mentioning it's not a healthy picture out there, but they will do whatever's necessary, so to speak. So we're seeing the euro push to the upside. We'll talk about that in a moment, but the main headline news will be tonight. It's the non-farm payrolls figures coming out, and as mentioned on Wednesday, we had disappointing ADP figures, which is the private payroll figures. So it's quite a good lead into the NFP figures. So yeah, sort of having the bias, having a look at this particular corrective pattern here, and the possibility of, well, the bias of disappointing non-farm payroll figures would sort of confirm further downside here, plus the bonds market and so forth. But with all that in mind, we still need, in terms of trading, we still need to work from a particular price point. And as mentioned here, the 555 here as a retested resistance would be a place to take that that short trade there as such. And this is what we'd be looking at here: the A, the B, and the C wave down through here. Now, this is the same for the Dow Jones as well. I'm finding that the FTSE and the Australian market might be slightly different as well. So this is the US 30 here, the Dow Jones. So once again, looking for an A and a B wave and a C wave down through to here. And then we can look for support back on the 14,500 after that, if that's going to be the case. In terms of day traders, the closest largest number would be 14,600. So a nice retested support on top of that 14,600 would be the would be the go at that stage there. So in terms of squeezing in a long position as such there, and also as well, once you've got the 14.6 here, and this goes for any market, just working with 600, the closest largest number, the next levels down in terms of degrees would be 610, 20 and 30. So you can use the 10 to scale in on to get a small position, then the 20 and the 30. If the 30 develops support, that's the top of subgroup 1. If you got support on that, then you can go in reasonably strong on that, and that will get you to the midpoint here, where there will definitely be problems, but after a reaction and possibly a move back to the 630, 640 area, then we should see a push higher up from that point there. So it's really a matter of, it's really quite risky to trade before the non-farm payrolls, as you know, because the price gets pretty sort of wild, and especially with the currencies as well, because most Forex providers set their client manager up to have wider spreads, later fills. Some of the fills can be up to like sort of 5 seconds in some cases. So, it's a bit of a dangerous thing unless you're really plugged into it. So the European markets are slightly sort of different, I guess, and also closer to the Australian market as such. This is just the DAX here. Basically, we're looking for 5 waves down, which we've pretty much sort of got. This does appear to be corrective here. Look, if support is found on top of Group 1, the 30, the 78, 78 is the closest largest number, 10, 20, 30, support on top of the 30, that will be a sign to the upside. Otherwise, expect the price from here, especially if the 78.20 becomes the pivot within Group 1, becomes the retested resistance, then you can expect the price down at 772 here. So you just need to wait either for support on top of 30 or resistance under the 28 there, but always within Group 1. It's always rough going through here. If you're day trading, you want to day trade through the numbers from 8 to 5 and then 5 to 3. Those numbers are the fastest, safest numbers to trade through, up or down. The FTSE, just get hold of the FTSE here as well. Right, the FTSE here, from the medium level here, the 65 100. We're looking at this in two ways, the A wave, the B wave, and the C wave here. In the C wave here, we're looking for 5 waves down to complete this here, and that may be in tune there now. So in looking at this a little bit sort of closer here, very much like the DAX as well, that's the wave 4 there. So if I just come back here, that's the wave 4 there. We'll be looking for 5 waves in this little structure to the downside here. So we need to count 5 waves from this point down to this point, which is doable. It counts reasonably well. But the way to confirm this is that this move up through here, you can see that this can be counted as an A, B, and a C wave here. There's 5 waves in here, the 1, 2, 3, 4, and 5. So it's a 3-wave structure. So if that high doesn't get taken out and this market drops down below here, then you know this is corrective, and then you know that this low will be taken out here. However, if this high here is taken out, by this moving up through here, then we would have 5 waves up, the 1, 2, 3, 4, and 5 up to here. Now, if that's the case, if we get 5 waves in that particular direction, this will be the same for the ASX 200 as well. So we can just go over that a bit. So if we get the 1, the 2, if that is 3 there, and that is 4 there, and we do get a high above here, say up to here, the 5, then we'll get an A and a B and a C wave, a counter trend, and then we'll see another 5 waves up. And possibly further up as well from that point. So, yeah, and that brings us into the Australian market as well. The Australian market here, just sort of look at this in the bigger picture first. This is the daily chart here. And as you know, we've been talking about having a 5-wave structure to the downside here, and that's all in play there now. This last leg coming down through here, it's a little bit tricky to count, and we could get it wrong, but basically there'll be 5 waves in there. Once those 5 waves are completed, then these big 5 waves here, we'll see a 3-wave counter trend. So the 3-wave counter trend, the textbook would have us pulling back to 61.8%, which would be, up here, so we just put that up there. This move up through here as well, that will also be what we call a 5-3-5 structure. So there'll be 5 waves there, 5, 3 waves in the counter trend, and then another 5 waves up through here. Now, when we're dealing with very large numbers like the 5,000 here, 5 is the second strongest number in the market, then it can skew the price action, skew the pattern, so to speak. So we may not get this 61.8% up through here. It may only come back into the 5,000 here, where the supply has been coming down. The supply was obviously up here or run out of steam, then to here. The 5-1, of course, one strongest number in the market, and then down to here. So we may see a squashed up version in here, because once this is finished, because we've got 5 waves here, we're going to get another 5 waves over here, which will bring us down to the 4,800 here. So that's pretty much what it looks like through here at the moment. So that's what we can kind of expect. So that's said and done. This is the 5 waves here, the 1, the 2, 5 waves down for the 3rd wave, the A, the B, and the C, complicated 4th wave here, and we're looking down for the 5 waves down through here. Now, I know that this is a little bit tricky to count down through here. I'll just see if we've got it here somewhere. Okay, this is it here from the 5,000. It's a little bit tricky to count in 5 waves, but if we had to do it, this would be wave 1, wave 2, wave 3, wave 4, and wave 5. So this would be the low looking in through here. But if we've got the US markets moving down, then it's a bit hard to see this moving up through here with the FTSE, but we have to trade what we see. So essentially, if we found support on top of 49.30, the top of Group 1, and it has to be tested support. So trading above it's just not enough. The breakout's important, but the retest is more important. So that's what you have to wait for. You have to wait for it to push up through there, then come back and sit on it through here. we should be this rally here is pretty much based off the US dollar dropping back below 83 and forcing the lower prices for commodities to the upside. So we're seeing rallies in copper and nickel and so forth, but those rallies are rallies. They are corrective rallies, and they've only got a session or so in them. So whatever happens in here may be short-lived, and I just don't know if this is going to follow the Dow or to do it, or will be doing its own thing. So we just need to be a little bit mindful of that, but we should see a supportive situation today. If we do close stronger today, if we close like strong, and with higher volume, not lower volume, but higher volume, then we're likely to see a follow through on the Monday as well. But we do have those NFP figures there from the US, and they will certainly rock the boat. So it is a little bit tricky of what to do here. Okay, here's some good news. Just looking, I was waiting for this morning. So from this low here, what we can see is a nice clear 5-wave structure up there. Don't you see that? So, I mean, you don't need to be Einstein to see that, but, you know, it may help. So, but the 1, the 2, the 3, the 4, and the 5. So what happens after a 5-wave move? This is little 1, 2, 3, 4, 5. So this has got 1, 2, 3, 4, 5. So there's a little bit more to go here, but after a 5-wave move, then we will be seeing 525 probably. Then we'll see an A, a B, a C, and then we'll see another 5 waves up to the upside, probably the same length as this one here, but could be the start of that larger this structure coming up through here, just the little tiny first 5 waves, because in this first little wave here, that one there, there'll also be 5 in there, and that's what we're sort of looking at now in a way, just the beginnings of that. We're just seeing that little wave 1 coming in here. So it's a possibility, so we can work with that. Okay, it's enough rambling about that. Commodities, let's check them out. Okay, we'll start with oil today, and yesterday we were looking at the possibility of this being wave 1 down to here, wave 2 to here, and then the wave 3 down, which it has moved down rather quickly, as a wave 3 does. So within wave 3 here, there'll be 5 waves, and that would be the 1, the 2, 3, 4, and 5 here. So this is wave 4 here. Normally, if we leave the trend line in here, this market will come back and retest the trend line through here. The other way to look at this would be the wave 4s are always 38.2% retracement levels. Well, thereabouts, textbook stuff. So that would bring us back into the 94 and on this trend line through here. So that's what we're looking for there. So wave 4s can be complicated, especially when they've had a strong move down through here. It's a lot of, it's a powerful move. It was a strong event. It's an emotional event, and it takes time to allow the dust to settle and so forth. It's just like any emotional situation that we go through in our own lives. The bigger it is, the longer it takes us to get over it. So that's what a wave 4 is. So expect that to dance across the 93 as a balance point eventually, and that will become the support or the resistance. You could short it from up here, otherwise look for the 93 to become the resistance. But the wave 5 down here won't be that long, because the wave 1 here was short, and when you've got the extension in wave 3, then the wave 5 will normally be the size of wave 1, so it won't be a very good shorting situation. You're better off sort of looking for stocks to work with in that area there. The copper market as well is doing its thing as well. That is, we're looking for the bottom of wave 3 here. And that's in play. We're looking for wave 4 now, which is wave 4's pullback 38.2%, or to the wave 4 of one lesser degree. So that's what we're looking for there. Let's see if we get 5 waves in this move up through here. We've got 3 so far, so we can have this as the A, the B, and the C wave through here. There's probably one more little move in here, but either way, let's allow this to play out through here, yeah, it'll eventually move down here as well. This is the same as gold as well. So when we're looking at just looking for USBHP there, because I know that we've all got shorts out there. So so first of all, USBHP would be the 65. Here's the medium level here. So we're looking at some sort of wave 4 correction through here as well, coming into play here before we see further downside in here as such. Look, likely to retest the 68 here. That's going to be the main number here. 8's like the third strongest number in the market. So 1, 5, and then 8. So yeah, something like this here. So unfortunately, if you're short in these markets, you either in the resource sector, whichever stock it is, you either take some profit now, or create a wider stop. You just need to sort of work it all out. I mean, personally, I just like to always work to the balance line, which means the middle sort of path. You know, not trying to sort of balance the risk up with profit. Being too greedy, you can get away with it now and again, but more often than not, it's not worth the stress. It's just better to work to that balance point all the time. It gives you something sort of meaningful to work with, so you don't want to be too scared or too fearful. Just taking that middle path and, you know, just getting that job over and done with and moving on to the next one, so to speak. Right, I just want to have a quick look at the banks while I'm here. Just right, this is the Bank of America here. We can see that we've got a little 5-wave structure down through here now. This is not with all the banks, but this little 5-wave structure coming down through here, and it may not be finished. I'd have to pull that apart, but we can expect a rally from that. And because we've got 5 waves down here, we'll get a 3-wave counter trend and then another 5 down. So this is what our banks will be looking at as well. So just bear that in mind there. The gold charts, once again, it's the same story as well. It's got a wave 4 rally coming in here. So we've had that strong third wave come down. So the wave 4, 38.2, is around the 1560 area here, which there'll be 2 levels of supply. This little block in here, then this little block in through here. It's a game of volume, and that's where it's sitting. Support on the 1550 here. It's moved above that, but it hasn't found support on it. You just need to look. We don't normally trade 4th waves, but if you're going to, then you'd need to drill down into the 5-minute chart, and that number there is really important, the 3, because even though that the 1550, the 50 is the midpoint, then the 3 is the group 1, isn't it? So support on top of group 1 would get you to the 5, and then from the 5, 55, then you'd be looking at getting in on top of that as well. All right, let's have a look at Forex. I'm just going to start with the Australian dollar. The US dollar is trading below the 83, so that will send the other currencies to the upside, plus commodities as well. The Australian dollar, as you know, we've been looking for this A, B, and C. I think that A wave's more so over here. Not that that matters so much, but the A, the B, and the C wave that we're looking at, this C wave here, is completed, so we should see further upside there. It's quite exciting. I know the 105 in the bigger picture is the balance line normally through the markets, but I know that 104 is also, in this particular case, because of the much larger picture, is also a very strong balance line as well. And as you can see here, you know, it was resistance and now it's support through here, and it's a strong support because we're not seeing this move back down through here, that the actual ABC has stayed above the 104, so it's very clean and tidy, very strong. So we can look at this after an ABC here, we can look at this move up through here as being positive as wave 1, and wave 2 coming back, and 3 and 4, so we should see it move further to the upside. But being above the 105 is very exciting. If I just have a look at the bigger picture here, you can see that this is a weekly chart, sorry, the $1 through here, we can see that, you know, we've had this sort of diminishing pattern through here, and you can see that it's sort of failed to find support up here on the 105 here. So if it does do it this time here, that's a very strong, powerful event, and that means that this high over here would be taken out. So that 105 is the second strongest number in the market. So that really gives a you know, a nice, healthy, strong trade from that point there. So, you know, given a bit of time, we'll work through this 105 here until we've got support here, and then, you know, and move up. I mean, we've already been long from way down here anyway. So, in this structure up through here, so there's probably people still long in this market to a point, because taking most of the profit 105 was the go, and then waiting for this to unfold. But if that's the case, then we really need to think about scaling in to get a few contracts below the 105. Yes, there will be problems up here as well, but getting a few contracts below the 105 it's just handy, because, you know, when you go to place trades further up here on support, then because you got that little bit of profit sort of sitting there, you can take a little bit more risk once it sort of fires up a bit. In terms of the ABC that we've been looking at through here, this is it here, the A wave. I've just got this as an A and a B and a C wave to here for the larger B, and then we've got the 5-wave structure down through to here. So got the bank report, so the Bank of Japan yesterday doing its thing, creating this, but we do have a nice 5-wave structure to the downside, so we can call that wave C. So what we're looking for now is wave 1 to the upside here, and then back for wave 2, then up for wave 3 here. So it's really up for you to work out when you come to the table and where the market is at that stage, to look for supporting levels and wave structures to move in on here. If I got a smaller version here, right? So okay, so this is from the low to the bottom here. The 144 is important because it's half of. It's the other side to 72 and 72 is 144, and in fact 144 is where Gann and Fibonacci or Elliott meet, the only number. Not there's a lot of difference between the numbers anyway, but it is important in terms of geometry as well. It's part of the 9 series of numbers, the nineness of it all, as they say. But look, we are looking at an impulse wave up here. You can see that little strong third wave in here. So from this point here, we've got the 1, the 2, the 3, the 4, and the 5 to here. From this point, we've got the 1 and the 2, the 3, the 4, and there'll be a 5 up through here. So there's more to this corrective pattern to come, being the end of the session, and also unwinding the emotion in the third wave through here. But look, the important things here are the market should stay above the pivot within group 1 here, the 10, 20, and 30. Yeah, look, just really find yourself a long position when you get to the table, and build in on the 30, the 40 and the 50, and then definitely the 72 is there as well. But do understand that there will be this structure to the upside in terms of, let's just... Let's just make that a bit more complicated over there because of wave 4. Wave 5 will come up into here somewhere. 56 or something. So once we've got that 5 waves there, then you can expect some sort of, let's just put it here, an A, a B, and I'll put that down there as an extreme so you can accommodate it. But once you've got this A, B, C here done and dusted, then you can start looking to the upside here. Okay, so it's just a matter of managing the risk, in what you're doing. So, yep, okay, that's it for that. The euro is pretty much the same as well. In fact, I've got this sort of labeled like this here, but in the bigger picture, the 130 here is really important, because if we get support on this, then we're going to go further up as well. So what we can do here, we can have this actually made a new low here. All right, so we can actually now bring in this here as the larger wave 1 low here, and looking at this as the wave 2 higher up through here, much higher through there. So let me just get a bigger chart. Okay, this is just the daily chart here, but just in a bit of a nutshell, what we're looking at through here is this all being wave 1 down to this point here. We are looking for the low here. It has been very tricky because this structure in this later part here has been a bit of a nightmare, really. But because we made a new low here, we can actually have this wave 1 in here, and we can be looking for wave 2 now. Of course, it needs to get above the 130 here, so that's one point that we need to look at. The other point is that in this move up through here, a bit like the Australian dollar as well, they'll be in line with each other. So what we're really looking for here as well is we're looking for if we get 5 waves there, that means we'll get an A, B, C counter trend here, and then we'll get another 5 waves up as such for wave 2 here. With me? Okay, be a bit like that. So this moving up through here has come up quite strong. It's actually looking like 3 waves up so far. So it's like we're at getting close to the top of the wave 3 here. What we need to see is a wave 4 and a wave 5. Having said that, yeah, so let's have a little bit of a squizzy at that as such. Okay, so really what we've got here, we've got this, there's an impulse wave here. This is 5 waves here, so this is coming back for wave 2, and then we can see that we've got 1, 2, 3, 4, 5 in here. There's still probably another little one in here, so there's still probably one more move to there. But what we're looking here for is that 5 wave structure. So we'll be looking at the 1, the 2, the 3, the 4, and the 5 here. That's what we're sort of looking at through here. So of course the non-farm payrolls are going to knock this all around as well. So that's just a little bit tricky. But the good news is I guess is that, you know, if we do get this 5 waves up here, and then we get the 3 wave counter trend, the ABC here, then we know that we're going further up through here. So there is upside here. It's just that you're going to be facing those NFP figures, which is sort of higher risk. There might be sort of safer stocks that you could trade. Maybe have a look at the New Zealand yen or something like that, because that's also got 5 waves going up as well. It's at the top of its 3rd wave as well, so it'll pull back to a 4th wave back into the 80. Once it's got support on the 80, then it should push up to the 81.30 or something like that. So that might be a better looking trade in our time zone here in Asia. Alrighty, well, that's it. So just sort of recapping a little bit, those NFP figures tonight will basically dictate the direction. A stronger close in Australia, a stronger close on higher volume would see Monday up as well, and Tuesday with a bit of profit taking but holding steady, and then the Wednesday opening lower and moving higher, and Thursday the bear day again. So that would be the bullish weekly cycle if we're going that way. But the US and the FTSE would be the same. The US markets have a bit of a different picture there. So, I could be wrong in one of these scenarios. So that's why it's really important to, whichever direction that you're trading, make sure that you're working with the closest, largest number. And the 1565 in the S&P 500 is the supply and the resistance. So support on top of that would create a bullish market. For day traders, you can work off the 1560, and on the short side, the 1555, and the Dow Jones at the 14,650 or the 14,600 for day traders. So we just need to navigate through that. Through this situation, but yeah. So anyway, that's it. So good morning, good luck, enjoy the day ahead and the weekend.